to Real Talk with Real Estate Pros, where we bring you exclusive interviews with the real estate experts. We'll delve deep into their journey to success and learn how to go the extra mile to serve their clients' wants and needs. Let's dive in. Here's your host, John Money McKinley.
Good morning, everyone. Welcome to another edition of Real Talk with Real Estate Pros. Thank you very much for stopping by today. This is John Money McKinley again, and I want to thank you all for subscribing and liking my show. We're starting to get out there now, and a lot of people are starting to see the show, and I'm very happy to continue to bring you all some great guests who can bring us some great information on what's going on in the world of real estate and all of the different factors that are involved with real estate. And as always, I have a special guest coming on board here. His name is Kenner French, and I have been lucky enough to get him away from all of his busy workings with folks in the world of the tax side of things, because that's one of the things that his company does, Vast Solutions Group. And I'm happy to have you on the show today, Kenner. Thank you very much for being here.
Buddy, it's an honor. Just to hang out with you just for the short time we're going to be hanging out, it's an honor because I'm excited to, impart some knowledge to your audience. It's going to be a good time.
I really appreciate that. And as always, if you all have any questions, please do me a favor. You can put it in the comment section. You can also, my text number is here as well too. Feel free to shoot me a text directly. Kenner is also going to give us all of his contact information at the end of the show, and it will also be put into the comment section, so you'll be able to easily get in contact with any of us. But why don't you tell us a little bit about what you and your company does, Kenner?
All right. Well, thanks again for having me on. It really is a pleasure and honor. Basically, I'm a business owner, entrepreneur who decided I want to do away with my biggest expense. And what was that? What is that? It's taxes. And then out of that came me consulting and me bringing on a bunch of tax attorneys and CPAs to help business owners lower their taxes. And one of the big ways of doing that, real estate. I was investing in real estate. A lot of our clients invest in real estate. So we thought, well, wait a minute, let's just, start helping out real estate investors to lower their tax liability, their biggest expense. I took on I came on this company, Vast Solutions Group. Now it's vastsolutionsgroup.com back in 2006. And it's been a fun little journey. At the same time, it's been a challenging journey. A lot of people don't care. They think, it's just taxes. I don't want to deal with taxes. But at the same time, I think we're doing a good job now of convincing people, letting them know that it's usually their biggest expense, and there's ways to lower their business expense, lower tax liability, legally, ethically. I'm a 3-time author. I've written for Forbes.com, small business contributor. I'm a keynote speaker. And also, as you can tell back here, I'm a Dave Matthews fan. And I travel the world following him. I travel the world following him. And once again, it's an honor to be here. And hopefully I can help, add some value. And always good talking to you, John. I'm excited to have this conversation.
No, I'm grateful to have you on here. I mean, that's something that is let's be honest, in 2024, especially for W-2 employees, taxes are some of the biggest expenses that people have. W-2 employees are the highest tax people out there, which, Kenner, I am a big fan of real estate investing myself. Mm-hmm. I've been working with real estate investors since the 90s, and in my opinion, that's one of the greatest things you can have to build wealth that there's available. And with the tax side of things, that is something that is so important that people have in line, because real estate does offer you tax benefits, but if it's not being handled properly, guess what? You could just pay a bunch of unnecessary taxes.
That's exactly right. And I'm not talking about doing stuff illegal, immoral, et cetera, but I'm talking about doing it intelligently. You just mentioned something pretty important. W-2 employees don't realize that, there's only a certain number of ways you can lower your tax liability. Number one. Number two, but if you, let's say, invest in real estate, let's say you start an LLC, you become an entrepreneur, you become a business owner. the tax code of the United States helps, believe it or not, it helps business owners. So by, let's say, putting together an LLC, let's say someone's a W-2 employee of whatever, Microsoft, right? They decide to start an LLC, putting in a piece of real estate into it. Well, just think about all the things that they need to support that real estate, that LLC. They'll need a computer, they'll need a phone, they'll need probably some travel, they'll probably need business meetings that are in different locations. All those things potentially are things they can, deduct, thereby lowering their tax liability. A side gig of real estate and LLCs in a lot of ways can really be helpful, and hopefully some of the listeners and viewers of this will be able to figure that out based on our short little conversation.
Yeah, I mean, it amazes me that people have been kept blind to what you can do with it. It doesn't take a lot, but with just a little bit of changing in the way you handle things, and all of this is legal. We're not pitching anything or talking about anything that is going to get you in trouble. Because like I tell everybody, the last person in the world you want to have an issue with or owe any money to is the nice, wonderful folks at the IRS.
That was a good point. And they are nice, by the way. That is a service provider agency. People don't realize that. And if you're doing things wrong, you deserve to get busted, right? But if you're doing things the right way, well, it's a service organization. It's here to support you. But, let's talk a little bit more about, about the thought of, employees or W-2s and trying to do a side gig. I had a lady tell me, she was starting a side gig and she didn't want to deduct anything. And I thought, well, wait a minute, why, I asked her, why don't you want to deduct anything? She's like, well, it might not be profitable. My side gig might not be profitable. But think about this. You have 3 years to make it profitable. So in those if you go past 3 years, there's this thing called hobby loss rule where, the IRS won't let you continue to deduct all the expenses. But if you're trying to make a go of it, hopefully you will be profitable, number one. But number two, at the same time, you have 3 years, and if you don't turn a profit, then things won't be deductible. But up to that 3 year period, deductions, right? And you can even do something like what's an example? Travel photography, right? That potentially deductible. All the things adding up to those, the starting the website, the buying the camera. You could buy one of those huge big cameras, deductible. And again, if you don't turn a profit after 3 years, okay, that's understandable. You can't deduct, but up to that 3 year period, you can.
Well, I mean, it's here's another good thing too. I mean, can you imagine if somebody works on putting together a small business and uses an expert like yourself to help out on the taxing side, and within 3 years starts making a profit? That sounds like a good thing to me.
Yeah, exactly. That's a pretty darn good thing. I agree with that. Totally agree with that.
And plus, I mean, there's so many techniques and strategies that people can use when even if they're still a W-2, and that's something. I've got a young son, he's 21 years old, and he wants to start a business, he wants to do this. And I'm like, whoa. Right now, the first thing you have to really do is you still have to focus on an income, because you can't just throw away the quote unquote job to go run into the business side. You want to work your job right now to give you the stability you need. Then you can start working on your business. Just know you're going to be working nights. You're going to be working weekends. You're going to be putting in that hard work. But the goal is let's take this business from a side / part-time to going, hey, my business, whether it's real estate or a side business, now is producing enough income to meet or surpass what I need to survive. Then you tell the W-2 world, goodbye, have a nice day. It was fun.
Yeah, let me tell you a real quick story. So back in 2005, before I actually leapt into being an entrepreneur and joined Vast Solutions Group, I thought, wow, I was scared. I got to tell you, I was scared. And basically what I did was I got my side gig ready, working with Vast Solutions Group and its sister entities, and I made sure that I had enough income so I can make that jump into being an entrepreneur. I was afraid. I get it, but it makes no sense in my opinion, to just make that jump. I did them simultaneously. So I made it, instead of a hard landing, a soft landing. And man, it made all the difference. I wasn't afraid basically after I made that jump, I knew that I was going to be able to probably succeed. And I think that's a pretty smart thing to do. Have the side gig, you get a deduction potentially going forward. And then again, you aren't making a huge leap. It ends up being a baby leap.
Oh, yeah. I mean, I have plenty of single family real estate investors that I work with that still have their full-time jobs, and they're doing quite well with the single family. I've got one individual in particularly, I just helped him out on a property that he purchased just a couple months ago, finished up the rehab, turned it into nice long-term financing for him, cash flowing, but he still works his job. His wife still works her job. And the reason is they're going to get their retirement benefits from that. And they've been building a beautiful real estate retirement model set up for them that is cash flowing like crazy.
Yeah, that's one of your deals. I was just reading the notes. You and I did a podcast together, and I was just reading the notes of it, and I thought, man, that guy's brilliant. Meaning, speaking of you, because you were teaching me ways and our audience ways of, well, you could do a lot of stuff with no money down. That's part of the reason I wanted to be on the show, is just to be able to operate together, have our audience learn of ideas like lowering taxes, doing no money down deals. I mean, it's the things that people need to learn about.
Exactly. And there's more than one way, I hate using the term, but to skin a cat is there's different strategies that you can use. And I tell this over and over again to people is real estate is a team sport. It is so important you have the right people in your corner. And that's why I'm so grateful you're able to come on this show today to have an expert who can really talk to us about taxes, because you can do all the great things in real estate. You can have the right real estate agent. You can have the right mortgage lender in your corner. You can have the right home inspector in your corner. But if you don't have someone like yourself, Kenner, that is there to help people to keep them in line, the IRS, and I know this may sound controversial, but the IRS is not your friend. They're looking to make the amount of taxes they feel they should get from you. You need to have an expert that can protect you so you're not paying more than you should for your tax liabilities.
Yeah. It really is wild how many people don't realize that there's so many strategies to lower your tax liability, again, legally. It really is incredible. But at the same time, no one wants to, taxes seems like a boring deal. Dealing with people who do taxes seems like, a far stretch at times. But it really is something that at least I think entrepreneurs need to know a little bit about, have a basic understanding so they can communicate with their tax professional who might really be really knowledgeable in ways to lower the tax liability. Now, I'm also going to say this. This might surprise you. I think in a lot of cases, it makes sense to spend, take your CPA, take your tax professional out to lunch, get that relationship with them, and maybe even pay them for lunch because, their time is money, because you might be able to get that relationship and be able to figure out some things that you didn't even know about based on that relationship. That CPA, that tax provider might be able to help lower some taxes based on some things that kind of is opened up during that lunch, during that meeting as an example. And again, I know it might not be the most exciting time to hang out with a CPA, but if that CPA or that tax provider can lower your tax liability, who knows? Maybe that was worth it for you to spend that money for that hour's time as an example. You just never know.
I mean, if taking a little bit of time, even though taxes may not be the most exciting thing, I don't know about you or any of my listeners here, is saving thousands or more of dollars every year on your taxes. I don't know about you, but that gets me excited.
Yeah. We just saved a guy $200,000. He was overpaying his taxes, and afterwards he said, spending the 1 hour with you guys made a lot of sense in the end. Well, of course, $200,000. I mean, that's a lot of tax savings because he was simply overpaying his taxes. The CPA didn't know some kind of basic strategies, and we helped him in that regard.
Kenner, are you telling me that this man was overpaying $200,000 to the federal government and they didn't call him up and go, ring-a-ding-a-ding, hi, federal government here. You're paying us too much money. Would you please take some of this back? I find that hard to believe, sir.
Yeah, no, not even close. In that case, by the way, he did a defined benefit plan. It was actually after the year. It was, believe it or not, it was after the year was over we can go back to the prior year and lower his tax liability. All he had to do in that simple case is implement a defined benefit plan. He had no employees, so he got to put away a lot of money, thereby saving his, saving $200,000, actually over $200,000 in tax savings.
Nice. Well, let me ask you this question then. What are you seeing in the market that is going to require your clients to think differently for the rest of 2024 and going into 2025? And I do not want to get political, but we know, especially during election time, there's always talk of changes with what goes on with the federal government on taxes. So what are you seeing that you think is going to make things different in the market that's going to affect
I'll tell
clients?
you. No, that's a really good question. Thank you. Forecasting, doing prognostication as far as your tax liability, which is in line with cash flow. People aren't doing that. I think more now they have to do that because of the political landscape. Instead, here's an example. If you're driving down the road, are you going to look in your rear view mirror, right, when you're driving 55 miles per hour, or are you going to drive forward? Well, what I would say is it probably makes a lot of sense to drive forward. Same thing with taxes, cash flow. Look forward. Look for ways to lower your tax liability. Let's say now in 2024, let's say the middle of 2024 versus at the end of 2024 or after 2024 is ended. The earlier you attack your structure, the better you will be probably structured to be able to lower your tax liability. You got to be proactive, even more so now because of the political climate that we're in.
So you're great advice. Proactive. You have to be proactive. And that's another thing that I stress to my clients is, hey, you don't want to be reactive. You want to be proactive. You want to be ahead of what's going on, because especially in taxes, especially in real estate, in the mortgage world, things are changing dramatically. And people don't realize that because they're busy living their lives. People don't have time to dig in their taxes every day. But someone like yourself, Kenner, you're in that every day. You know when changes come or are coming, and you can be there as a valuable source of guidance for people to advise them, hey, there's some changes coming. We need to be prepared for this so we can either A, take advantage or not get hurt by this.
Yeah, exactly. So here's a good example. Let's say you have someone who's thinking about buying a piece of property buying a piece of property now, and they meet with you December 31st to get the financing. Does that make sense? No. If they figure out now that buying a piece of real estate is going to help them, one, get richer, and then two, lower their tax liability, they should start doing that now. They should reach out to you, I would think, get their financing in line, because that potentially will help them get their financing because they've done it proactively. And again, that's also a tax play, because buying real estate generally will lower your tax liability. I'm saying generally, by the way. And if at the same time, why is that, by the way? Again, the tax code is written for entrepreneurs. Underneath it would be the same thing for real estate. Real estate is such a good tax play. It's unbelievable. People don't realize that. You can save a lot of money in taxes through depreciation, through a whole number of tax strategies.
Oh, yeah. Real estate, like I said, it's one of my favorite avenues for tax savings, for investing. I mean, it's since the history of time, it's been there as a valuable tool to use. And of course, we know there's a lot of gimmicks that you'll see on the internet, especially not too long ago, it was the infomercials. But if you take the time to get educated, take the time to get yourself in a position to be able to make a smart financial move. And there's been so many changes that have happened over the years in real estate and real estate investing. You have to have the correct people in your corner.
Yeah, that's exactly right. And by the way, right now, I'm going to just go ahead and I'm going to stick my neck out and say this. Some people are selling real estate at low values because they need to get out of the real estate because they're losing their job, let's just say. Well, would you rather buy high, sell low, or buy low, sell high? Right now, generally speaking, is probably the best time to find real estate because there's going to be some values out there. And to do that, you got to get your financing. You got to call people like you. I mean, it's a very good time to be in the real estate world, especially if you have cash, by the way. Or even with you don't even need cash because you have some strategies where you don't even need cash.
Exactly. And it's like I have some folks, I don't want to spoil anything or mention any names, but it's an individual I know very well. And him and his wife had been talking about investing for years in real estate in multifamily, and his wife decided to hold off. And I was chatting with him. I just helped them purchase their new home here recently. He's like, I'm kind of mad at my wife for not having me invest yet. I said, no, sir. Your wife did a very good thing. We are coming up on some very good, interesting times here that you're going to be glad you have all of these resources now to be able to invest. And I looked at him square in the eyes. I said, I've known you for years. I know once the time is right, you guys are going to go to work and you guys are going to do very, very well and set up your retirement, because he's looking to go straight to multifamily. He doesn't want to even touch single family. It's like, no, I want to go straight to multifamily.
By the way, that's funny you mention that, because multifamily, I think there's some real good buys nationally. We do at vastsolutionsgroup.com, we do business all over the country, but I think there's some really good buys in where you are. And that, believe it or not, because I think so many people are moving to that area that there's so much development opportunity. I think there's some good buys that can be had in Texas specifically, specific as it relates to multifamily, as a matter of fact.
Oh, exactly. I mean, Texas is doing phenomenal. I mean, we've been blessed because so many companies are moving here. I did a video not too long ago. I think it was actually last week, where we were talking about Elon Musk. He's bringing both of his corporations here. We've got Chevron that's coming here. I also found out a few months ago, El Paso, of all places, is booming right now. That is,
wouldn't have thought of it. I had no clue. Yeah,
I didn't either. And what's going on is it's the biotech industry is there. The stem cell research, not stem cell research, but the STEM fields are huge there in El Paso. In El Paso, they're like, no, we're not talking about the quote unquote city. Look at what's happening just outside the cities. It is going crazy there because of all of these companies and tech companies coming in there.
Yeah, I had a friend slash client who, what he would do, and he'd be perfect for Texas now. But basically, what he would do is he would buy in shoulder communities wherever the big boxes are coming in, or at least looking to come in, and then that's when he would do. That's where he would buy his real estate. So his real estate would go up because all those big boxes are coming in there, like whatever, IKEA as an example, or whatever, any of the big companies. And I think Texas would be a perfect spot for that. I really do.
Oh yeah, I mean I'm gonna be honest with you. I'm very excited about being in Texas because there is just a vast opportunity. Whether you want to go get a good job, whether you want to invest, there is so much opportunity. Because let's be honest, I think we can both agree, and a lot of my viewers here can agree, that some troubling times are coming for the economy. It's just, it is what it is. But if you have yourself in the correct position and you've taken the time and you've got the right people in your corner, you can get through these times. I'm not saying the world's coming to an end, but I mean, you look at through the history, you've got your ups and downs. And it's really been a little over 10 years since we've had any really downs. We're due for it.
Now, the real money's made in the downs. I mean, anyone can make money at the top, right? But when the big money is made on a market downturn, I mean, think about it. I mean, again, buying low, selling high. You want to buy low and hopefully sell high. And right now, I would think we're kind of in a downturn, or close to a downturn, or maybe even the bottom downturn. I don't know. But right now is the time to buy. And again, if you have access to capital like you have, even better.
Oh yeah, I'm excited, and I'm really been chatting with a lot of my real estate investors and letting people know, hey, now is the time. Whether it's the single family or whether it's the multifamily, there is just a vast opportunity going on there. And I'm sure a lot of people have seen there's a whole lot of changes that are starting here in the coming weeks with real estate and how real estate agents are able to do business. So
yeah, the whole deal's changed. Yeah, I would agree with that. By the way, I'm going to throw one thing out. I was just talking on a podcast yesterday where I was being asked about tax strategies with respect to real estate. A lot of people don't know you could do self-directed IRA investing, meaning you can invest your own assets in IRAs, and those assets can go towards real estate. They don't have to be in stocks, bonds, or mutual funds. But well, wait a minute. you mean you can really invest your hard-earned money in your IRA into real estate? The answer to that is yes, especially, even, multifamily like you just mentioned, or, buying single family homes or whatever the case is. And by the way, if it's in a Roth IRA, it's tax free. So meaning, let's say the number's $100,000 in a Roth IRA. You buy a house for 100,000, whatever the number is, right? And it goes up to 200,000 as an example. And that example, you don't have to pay taxes when you pull the money out, as long as you abided by all the specifics of the Roth and IRA regulations. So, hey, you don't have to pay taxes. That's a good strategy for someone to think about in Texas or anywhere in the country, if you really think about it.
So wait a minute, Kenner. Are you telling me that people can use a self-directed Roth IRA, purchase real estate with it, any profit that real estate makes goes back into that self-directed IRA because it has to, and that money, when it comes time when they're able to legally pull it out, is tax-free?
Yep, all that you said is exactly right. You got to like that, right?
That's phenomenal. So you're telling me a younger person, let's just start with a younger person, let's say someone in their mid-20s, maybe 30 years old. A strategy they would want to look at is, because they're not going to be, if I'm understanding correctly, and if I'm wrong, please tell me, they're not going to be able to keep any of the money that comes in on the property as far as put in their pocket today, but it goes back into that IRA and continues to grow, so they could start young, and before they know it, they could have a very large amount of capital in that self-directed IRA. So when they hit the specific age, that money can be pulled out at any time as much as they want for no tax consequences.
Yeah, in that case, in your example, it's a Roth IRA. That's exactly right. Or a Roth 401k as an example. To both of those, yes. So think about it. So I'll give the example again. Let's say you put in $100,000, right? Or no, let's say in a Roth IRA, over the years, you've accumulated 100,000. You buy a house as an example, and it's a gross example. Let's just say it goes to $1 million, right? On an ongoing basis, zero taxes. And when you pull that $1 million out, you don't have to pay any taxes. So you're exactly right. The cool thing is if you own the real estate in your own name or an LLC, you would have to pay taxes, right?
Right.
But in this case, there's zero taxes on that $1 million. So, is that a powerful strategy for real estate? The answer to that is yes. And it really works well, especially if you're buying in a down market. Really works well if you're buying in a down market. So in that example, someone's going to, the IRS is basically saying, here, we're not worried about you because, well, you're invested in a Roth IRA. We're not going to tax you on the way out. Good stuff.
And here's the beauty for all my viewers to understand is, let's say it's a $200,000 house in this example. You don't need to go take $200,000 cash to buy that house. You can use leverage with a loan. Just make sure the home cash flows. I always stress that. If it doesn't cash flow, don't buy it. Buy that house in the Roth IRA. The payments the rent that's received on that will cover your principal, interest, taxes, and insurance. Anything that's left over goes back into your Roth IRA tax-free. And let's say 25 years from now, you bought that house for $200,000. Now it's worth $800,000. Any money that's made from the sale goes back into the Roth IRA. No taxes.
All that you said is exactly right.
That is phenomenal. Now, let me ask you this. Is this something that you can help people with and direct them if they reach out to you?
No, the answer to that is yes. We love doing that. And by the way, if someone's interested, they could email us at info@vastsolutionsgroup.com, info@vastsolutionsgroup.com. We could go over some of the specifics, educate them. By the way, they should say they're friends with you or a listener or audience member of your audience, and then they're going to get some special discounts, by the way.
No, I greatly appreciate that. And that is something that strategy you just gave there is phenomenal. And I hope my viewers really pay attention to that, because that is something that is going to give you the ability to set yourself up to go into retirement going, so what if Social Security's gone? I don't care. I have myself set up in a position where I don't need the Social Security.
Yeah, people have got to remember Social Security was not made really for us to use as a retirement vehicle. It's only supposed to augment whatever you saved. So, I get it. It's times are hard. You might have to rely on Social Security, but it's so much better if you think of that as just kind of icing on top of the cake. Hopefully people are investing as well as possible so they can get a pretty big pile of money at the end of the day and then augment it with Social Security. But yeah, everything we've talked about, just like I mentioned, it's tax-free, and it's one great way of, increasing net worth and making income, hopefully, down the road.
Imagine having a self-directed Roth IRA and other real estate investments that are not in the self-directed IRA that you're still receiving money on month after month after month, and then you go into the retirement, you're very comfortable in that position.
Yeah, yeah. I mean, and hopefully people are getting good advice because, back to the self-directed idea. Now, self-directed, what is self-directed? You have to take it upon yourself as an investor to manage the assets, to invest in that piece of real estate, right? But so there's issues there. It's, you're treading in some scary into some scary waters, but at the same time, who knows, maybe you're getting help on the assets outside of a self-directed investment, and that's just maybe just a component which is augmenting your normal investments. But whatever the case is, I would say you got to get invested now versus later. A lot of people think, oh, I'm going to be okay in retirement. Well, hopefully that's the case, but you, again, prognosticating, doing planning, forecasting, it's so much better as far as what's going to happen in the future if you start now. If you plan now, it will help you in the future, not only about taxes, but also with respect to your net worth and investing.
Exactly. People need to understand that before you know it, time just slips by and you wake up and go, oh my God, how did I go from here? Like I said, I got a 21-year-old son, and I keep stressing to him, I'm like, look, I know you're only 21 now. You're going to wake up one day and you're going to be 26. And then another day you'll wake up and you'll be coming on 30 going, where did my 20s go? I said it was yesterday you were in high school. I said it was a couple months ago you were in middle school. He's like, oh.
Yeah, let me tell you a story. So, and I'm going to be an open book here. So I was basically semi-retired for about 10 years. So meaning I'd work maybe an hour, 5 hours a week, right? Because we had income coming in. And because I'm embarrassed to say this, but I will say it. I wasn't really thinking about the future. I was thinking about now. I thought, things will work out. I won't have to work during retirement. I don't really have to work in retirement, but then again, for me to have the lifestyle, I need to work at least now until I'm whatever, let's just say 5-10 years. But if I would have planned probably correctly and didn't take those 10 years off, it would have been much, much smarter for me to have done my planning then that I'm now having to catch up on. And I think a lot of people are in the boat of, I'm going to put it off until later. Really, it just doesn't work. You got to attack it sooner rather than later. You'll be much happier if you do it sooner rather than later. And of course, by the way, there's a lot of people out there who are kids are out there like, I'm going to be fine in retirement. Well, how do you know unless you plan now?
Exactly. Well, Kenner, I appreciate it. My producer's banging on the window going, hey, John, we're past the 30 minutes here. If you would, please do me a favor and tell my audience how they're going to be able to get in contact with you and how they can reach out to you so they can have a tax expert in their corner.
Yeah, it's a team, by the way. I like to take the credit, but it's really my team. If they email info@vastsolutionsgroup.com, info@vastsolutionsgroup.com, again, refer to you. By the way, I wrote a manuscript. This is a collection of all my a bunch of articles that I've written over the years. The Entrepreneur's Manifesto, a collection of smart financial advice. If they email, again, info@vastsolutionsgroup.com, they'll get a free copy of this sent to them. Free. You got to like that word free. All they have to say is your name. Again, email info@vastsolutionsgroup.com. They'll get a copy of this book. It's got some really good articles. I had one person say that it changed her life. Made me seem pretty cool for writing this and with her saying that because it got her thinking about retirement. But anyway, go ahead and email us at info@vastsolutionsgroup.com and say your name.
Nice. Well, I really appreciate you being on. Thank you very much. And I definitely want to have you on in the future because I know there's always things changing on the taxes, especially after this election time. So can I have you back on in the future, Kenner?
You better believe it. This is a good time. You're a good dude, and I know you help clients. You care about the clients, so of course.
Alrighty, thank you. Well, let me get out of here. I appreciate everyone tuning in today. Thank you very much. Once again, this was another edition of Real Talk with Real Estate Pros. Y'all have a great week, and as always, we'll be here next week, Wednesdays at 11:30. Thank you.